Can I just ask you a couple of questions about kind of how you see the state of the economy right now?
Well, I think that's the most interesting subject in the world, but I can't talk about it now. I really can't.
How do you think tariffs will affect the economy?
I mean, tariffs are actually, we've had a lot of experience with them. They're an act of war to some degree.
Is Florida heading for another housing crisis? Shocking new data suggests the Sunshine State's real estate market is flashing red, with eerie parallels to the devastating crash of 2008. But what if I told you this time could be even worse? 12 Florida cities are reportedly turning into ghost towns. Today we're diving deep into this alarming trend, uncovering the challenges and the hidden forces turning paradise into a potential wasteland. You need to see this. One of the most striking changes in Florida's housing market is the rapid increase in housing inventory. In major markets, housing inventory has exploded by 47% compared to the previous year. Some neighborhoods are even seeing inventory levels triple. This surge in available homes for sale is a significant warning sign. It indicates a potential oversupply that could drive prices down further. Insurance costs have become unbearable for many homeowners. Coastal areas that once had reasonable premiums are now experiencing outrageous increases. For example, annual premiums that used to be around $2,000 have skyrocketed to between $6,000 and $8,000. In some cases, homeowners are facing insurance costs that exceed their mortgage payments. This financial strain is forcing many residents to leave the state. Over 500,000 Florida residents left in 2023 alone, marking the first significant population decline in decades. This mass exodus is not limited to retirees seeking cheaper alternatives. It includes working families, young professionals, and longtime residents who can no longer afford to live in their communities. Areas from Naples to Jacksonville, once vibrant neighborhoods, are now showing troubling signs of decline. Median home prices have dropped by 12% from their peak in 2023. However, this decline may just be the beginning of a much larger correction. Our team has spent months analyzing data from various sources, including Zillow, Realtor.com, and local MLS systems. We have also interviewed real estate agents and property managers to paint a clearer picture of the current market conditions. Let's take a closer look at specific cities that are particularly vulnerable. Lehigh Acres, for instance, is a suburb of Fort Myers experiencing significant investor-driven issues. A staggering 68% of properties in this area are investor-owned. Of those, 42% were purchased between 2020 and 2022, often at prices 40% to 50% above previous market values. As costs rise and rents decline, these investors are facing a perfect storm. Foreclosure rates in Lehigh Acres have surged by 56% year over year. This increase is not just a result of individual homeowners struggling, it indicates a systemic failure in the market. Homes that once sold in 22 days are now sitting for an average of 87 days. Some properties are taking over 120 days to find buyers. Insurance costs have also skyrocketed to an average of $4,800 annually, with many homeowners being quoted even higher rates for new policies. Port Charlotte is another city where the market is unraveling quickly. Data shows that 34% of listings have seen price reductions, with some properties seeing cuts of 15% to 20% from initial asking prices. Local builders have canceled or postponed over $280 million worth of planned developments. The vacancy rate in Port Charlotte has reached 22%, leaving entire streets in once desirable neighborhoods with multiple empty homes. Hurricanes Ian and Adelia have compounded these issues, as insurance companies now require extensive wind mitigation upgrades that can cost homeowners between $20,000 and $30,000 out of pocket. Many residents who wanted to stay in their homes are being forced out by these skyrocketing insurance costs. In Cape Coral, the average property insurance premium has reached $5,200 annually, creating a situation where 45% of homeowners are paying more for insurance than property taxes. The inventory surge in this city is staggering, with a year-over-year increase of 89%. Median home prices have already dropped by 8.2% in just 6 months. The number of pending sales is also concerning, as contracts are being canceled at unprecedented rates due to insurance issues. Deltona is another example of how quickly economic fundamentals can shift. The local unemployment rate has doubled since 2022, impacting sectors that traditionally supported the housing market. Our analysis shows that 28% of mortgages in Deltona are now underwater, meaning homeowners owe more than their properties are worth. This situation affects not just recent buyers, but also those who purchased homes in 2019 and 2020. Spring Hill paints a vivid picture of a market in distress. Data shows that 52% of recent sales were below asking price, with average price cuts reaching $47,000. Insurance costs are forcing 1 in 4 homeowners to sell, leading to a flood of inventory that overwhelms buyer demand. The decline in investor purchases is particularly troubling, as investors who once bought 40% of available properties are now trying to exit the market simultaneously. In Palm Bay, property tax assessments are actually declining for the first time in over a decade. Foreclosure starts have increased by 41%, signaling a fundamental shift in the market. Homes that once sold in 2 weeks are now sitting for an average of 95 days. The construction industry has ground to a halt, with new building permits down by 82%. This slowdown impacts everything from material suppliers to local employment. Port St. Lucie exemplifies the HOA crisis gripping Florida. New communities that once marketed themselves as luxury developments are now struggling with astronomical HOA fees. These fees have risen by 185% since 2022, driven largely by insurance costs. The median home price has dropped by 9.3% in just 6 months. Buyers are now demanding extensive insurance history before considering a purchase. Point Siena reveals how quickly equity can vanish in a shifting market. A staggering 44% of homeowners are trying to sell while in negative equity, representing a dramatic reversal from just 18 months ago. The average time to sell has ballooned to 96 days. Insurance costs average $4,600 annually, driving away potential buyers, particularly in older communities where wind mitigation upgrades can cost upwards of $25,000. Northport is showing alarming distress signals, with 62% of recent sales being distressed properties. Average price reductions have reached $68,000. Insurance costs have doubled in just 12 months. This situation makes Northport one of the most expensive insurance markets in the state relative to home values. Investors who drove prices up during the pandemic are now trying to sell into a market with few buyers. Ocala demonstrates how quickly market sentiment can shift. A staggering 47% of listings have seen multiple price cuts. The average home has been repriced 3 times before finding a buyer, with total reductions often exceeding $85,000. The complete halt in new construction is concerning, as major builders have canceled over $180 million in planned developments. Wesley Chapel tells the story of rapid decline. The fact that 58% of RE23 prices underscores the severity of the situation. The 94% surge in new listings has created a massive supply glut, with some neighborhoods seeing multiple listings on the same street. Builder incentives are reaching up to $75,000 on new construction, a sign of desperation in a declining market. Winter Haven tops our list of markets in freefall. A staggering 72% of recent sales are below asking price. The average price cut of $88,000 reveals the depth of the crisis. The tripling of insurance costs since 2022 has pushed monthly carrying costs beyond what many local incomes can support. The 238% increase in foreclosure starts is alarming, indicating severe market stress. The Florida real estate market stands at a crucial turning point. The warning signs are undeniable, and the momentum is building toward a significant correction. For those who understand the risks, this situation presents both challenges and opportunities. Investors should consider exit strategies while demand still exists. Timing and location will be critical as prices continue to drop. Staying informed and prepared is essential in navigating this complex landscape. If you're concerned about your financial security and are thinking about investing, check out the first link in the description. It's the platform I use, Interactive Brokers. Click the link to learn more. For more insights and updates on the Florida housing market, subscribe to our channel for weekly market analysis.